I'm reminded of my days of chemical engineering. When we used to do chemical engineering, we always spoke about a chemical reaction, which actually talks about two substances getting together and creating something very different, right? A classic case is hydrogen and oxygen. Hydrogen and oxygen can also do water, which is H2O, or hydrogen peroxide, which is H2O2. So addition of one or two, atoms or elements can completely create very, very different types of outcomes. That's really the way a multi-asset allocation strategy also works. One can allocate investments in combination of different asset classes, and a right mix of these asset classes can help investors achieve an optimum level of risk-adjusted returns. Different asset classes play a very different role, right? In India, you primarily have four different asset classes, right? The largest one, of course, is the physical real estate, which we're not talking about on the financial side out here. But equity, debt, and gold is where most of the money for investors are. Equity in India, we always talk, is a long-term wealth creation story, right? They've compounded well over long periods of time. You can get good, solid double-digit returns from equity. Debt actually provides a lot of stability to the portfolio. They include traditional fixed deposits as well as debt mutual funds. Gold has always been an asset class. In a way, it's anti-equity, right? When gold does well, equity is not normally doing well. It provides a very strong hedge against inflation. So like chemicals, which I was talking about, asset class also perform a very different role when they are mixed on across different asset classes to create the type of mixture which we spoke about. So the correlation of different asset classes is quite unique. For example, when you compare equity and gold, right? Domestic equity and gold, there is a negative 0.52 correlation. That means every time equity does well, gold actually doesn't do well. Now, the economic cycles and market cycles are very, very difficult to predict. In fact, many times you will find that there is a lag effect of market cycle versus economic cycle, right? And asset classes tend to perform differently at different points of time. Hence, it's not difficult, but it's impossible to predict timing and predict what asset class will do very well at this point of time. So if you have uncorrelated asset classes like gold and equity, like debt and equity, international equity in correlation with what happens to the domestic markets, you could create a good optimum mixture which will actually help you generate reasonable returns with moderate volatility over a longer period of time. So WhiteOak Capital Multi-Allocation Fund is a unique offering where asset allocation across all these funds is being done on an internal proprietary model which WhiteOak has created, right? It does allocation to debt, gold, Indian equities, as well as international equities on the basis of relative attractiveness of these asset classes, right? We've created models which will decide what is more attractive from a value perspective of a particular asset class. Hence, as I had said in a chemical reaction, the whole endeavor out here is to actually provide this reasonable return with low to moderate volatility by having these non-correlated asset classes or low correlated asset classes mixed together in a mutual fund structure. So investors who are actually looking at a hassle-free as well as a very tax-efficient way, investing into a single mutual fund across all asset classes which are available within the financial market should definitely look at the option of investing into the WhiteOak Capital Multi-Asset Allocation Fund. It helps you to diversify your investments without trying to time markets and at the same time achieve reasonable returns with very low level of volatility. Having said this, investors should always consult with their financial advisors, understand their own risk appetite, suitability, and what is the return expectation from a life cycle perspective before making this investment.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.